Drop een eentje in de chat. Cool. Oh, good morning. It's gonna be in English. My excuses. Who slept who slept well tonight? Drop a one in the chat. 0.5. That's so funny. Anyway, cool. Um, I might have something special for you guys today. So the people that are on the morning calls are going to be blessed today with extra information. Cool. So tonight after some good trades, yeah, amazing, amazing, amazing. Cool. Let's get straight into it, huh? Everybody has their coffee. Let's open up the charts together. Sci-fi. Login. Who made some money on sci-fi yesterday and today? Drop some. Drop anything in the chat. Doesn't matter what you drop. Of course, Alice did. Cool, cool, cool. So, first step, share screen. First step to sci-fi. What's the first thing that we need to know? First thing that we need to do every single time. Check the news. Yes. In the sci-fi tool for the people that are new, we have the news economic calendar in the right corner. You can click on it and you get all the news of the day. Now this week is NFP week if I'm correct. So that means that there's a lot of news and the markets move a little bit different. They move a little bit slower, and they are holding for bigger news to come out. But every time I check the news, I uncheck low, and most of the time I also uncheck medium news. You can leave it on, but most of the time I only look at high impact news. As you can see, we have a lot of it today. We have some for the euro coming in 3 hours, US dollar in 6 hours and 40 minutes, and the Canadian dollar. Cool. So what do we do now, guys? When we see the news, somebody has to know. Set the timer, exactly. So we go to our alarm clock, we look at the times, and we put in the timer. I'm gonna put one in 3 hours, so that's at 11. Euro news. And one at amazing. Cool. Let's check out the alerts we got going on from yesterday. The first one we got was Scat JPY. I think this was this night. Does anyone know? Did anyone take this trade? This may be a better question. You can be honest. If you took this trade, you can drop a one in the chat. If you didn't, drop a two. Almost, almost. Okay. You guys are getting disciplined. I'm liking it. Amazing. Cool. Why didn't you guys take this trade? I was sleeping. No good pullback. No to a pullback. Yeah. Amazing. So for the people that are newer on the call, let me explain the 3 simple steps once again. First one is a dark shade arrow. Second one is a 2-day pullback. Third one is a M or W. Cool. Now we have a dark shade arrow. It's this one. We already checked news, Jorrit. Oh yeah. Let's do step 0. check the news. These calls are really good for myself as well. Jorrit is always reminding me, so that's a goodie. It's okay, it's okay. Cool. Check the news, dark shade arrow, do the pullback, M or W. Now, dark shade arrow looks like this. We're in a downtrend, so we're looking for a down for a red arrow. Then we look for 2-day pullback. Now, as you guys can see, if you take our meetlat, I don't know, a ruler, you can see that we only have 1 day and 8 hours of pullback. We do have a big W, a big M, but because there are no 2-day pullbacks, we don't take this trade. Cool. Then we have Euro JPY. Who took this one? Again, you can be honest in the chat, guys. Yes, yes, yes. Amazing, Alice. I think Alice read the ebook. I'm in this. I'm going to be honest with you guys. I'm in this one as well. And I'm gonna show you why we are in this today. Who of you read the read the ebook? Who of you guys read the ebook? Drop book in the chat if you read it. Cool, cool, amazing, amazing. I'm gonna open it really quick for the people that haven't read it. Sci-fi. Okay. Read and wrote, lol. Jens. What do you mean break even up at 5:45? Oh, yeah, does it say be up at 5:45? No, it doesn't. But sometimes it's helped. Cool. So the ebook is right over here. You have this document links. You have the trading journal, the sci-fi track record, and then you have the ebook. If you read the ebook completely, you at one point you would have you would come onto a page which has this. Give me a second. 2-day pullback. When looking at step 2, the 2-day pullback, you'll see it's not always a perfect 2 days of pullback. Knowing how big these pullback are on average will help you make a good judgment of where we are right now. Then you see a list of multiple pairs with the average pullback in it. And when you look at Euro JPY, the average pullback is 260 to 290 pips. So if you go to your scanner, you take your tool, you look at how many pips this is, see that the pullback is close to 260 pips. It's 251, which is just below the average. If it was 240, I would have never taken the trade, but because it was so close to the 260 average pullback, and we had an M, I took this trade. So does anyone have any questions about that? If the average pullback is clear, drop a 3 in the chat. Yes, Bruno, the range of the pullback is more important than the duration. And the reason why we use a 2-day pullback on almost any pair is because we don't have an average pullback of every single pair. And when you wait for 2 days, most of the time the average pullback, the pullback will be at an average. So that means that the pullback will have pulled back enough to be at an average to go down again. But for the pairs that do have the average pullback over here, just look at the average pullback. If you then have an M, you can place the trade. Cool. Does anyone have any more questions about that? Because that's the biggest thing I wanted to share with you guys today. Otherwise, I'm gonna give the word to Jens. I'm looking for the chat box. 323. Where do you start measuring for the pullback? Really good question, Henry. So when you want to measure the pullback, you always look at the lowest point and the highest point of the pullback. So what I mean, we have price going down because we're in a downtrend. At one point, price starts moving up again. And from the point, the lowest low where the price moves up again, you place your ruler and you measure to the top. And then you can see 2,500-ish. That means 250 pips. Oh, you don't take this one. You never take this one. You take this one because this is a lower low and this is the lowest point. So you measure from the lowest point to the highest point where we see an M and a dark shade arrow forming. Yes, Bruno. So the pairs that don't have an average pullback, just look at the 2-day pullback and you'll be fine. Yes. Amazing. If anyone wants the link for the ebook, it's dropped in the chat by Jens van den Broeke. Very good lesson, low to high. Yes, always lowest low to the highest high of the M. And then when you have an uptrend, you measure from the highest high to the lowest low. It's the other way around. Cool. That was it for me today, guys. I'm gonna give the word to Jens. Um, as you can see, the people that are on the calls are getting extra value. So you can always share it in the chat, share it to the people that people should be on these calls if they want to actually make money. But anyway, I'm gonna give the word to Jens. I'm gonna give the word to Jens. Jens is my personal mentor. He's the person who helped me develop through the 1 year and 9 months, I think it is, since I've been in this amazing company. Super amazing creator, a man with a really big heart. Jens, I'm not gonna talk too much. I don't want to take too much of your time, but a really inspiring young person. Oh, I need to make him host again every single time. For the people that don't know, Jens has led teams of more than 120 people, has been trading for 5 years already, and has literally watched and learned every single strategy on the platform. So if you have any difficult questions, now is the time to drop them. So Jens can really answer them in a good way. All right. Jens, you are co-host right now. Let's
All
go to the
right.
stage.
Amazing, amazing, amazing. Can you guys see me, by the way? Because I just see a gray screen on my own camera. I don't know if you guys can see me, but yeah, it is what it is. So first of all, give it back to Maxime. Oh, you guys can see me. Yeah, they will have to do it like this. I'm sorry, I don't know why that's happening. Earlier, I couldn't see the chat box, so I left the call. I came back in. Now I can see the chat box, but I can't see myself. So yeah, it is what it is. Matrix attack. All right, but yeah, give it up for Maxime in the chat. It's amazing to see how he has been killing it with sci-fi on the charts, in the teams, etc. And let's dive straight into it. Let's dive straight in. So here we go. I'm gonna share my screen in a second. Yeah, that's it. All right. So to go a little deeper into, the valid sci-fi plays we have. So what do we have? We had Euro CHF 23 hours ago. This was an alert something went wrong because 23 hours ago there was nothing to see on Euro CHF. So a little update on that. The momentum is pretty good in Eovia, let's say it like that. And the scanners, multiple scanners are overloaded with traffic. So what happens is, hundreds or even thousands of people are logged into these websites, like for example, sci-fi.tools. Um, and they're all looking at sci-fi. And what happens is all the traffic on these scanners makes the scanners overloaded or something. I don't know what it is, but yeah, the tech team handled it. We have direct communication with them, so that's amazing. We're really blessed to be in a company like this where they just working day and night to make sure that everything is running properly. So now everything is running good again, and we have Euro JPY, we have Euro CAD JPY. Of course, CAD JPY is something that I'm not really interested in because it speaks for itself. This right here could have been the M, and if that's not the M, then it's this one right here. But that's way too big for me personally, especially if you don't have a 2-day pullback. So then going to Euro JPY, I told you guys yesterday that I'm gonna explain why I liked this M. And this is something more technical. This is something that is more goes a little deeper into institutional orders and stuff. But the reason why I like this and that we see right here, of course, most of you took the trade right here. You would have put your stop loss right there, and you take your arrow on the closure of this bearish candle. Now, someone asked in the chat, how can I place my stop loss and my take profit right? You just put your stop loss up at the top of the high. Your first target will be a 1-to-1 risk to reward, right? And this is target 1 that just has been hit. For me, this is a hit. I'm break even for sure. So target 1, go break even. It's more of a, you have to have a significant move to go break even, right? If it goes like 2 pips below, then I'll still put it break even just to be sure, because it did a move and then it might pull back. Especially in this case, but I'll go deeper into that later. And then, of course, your full take profit will be a 1-to-2 risk to reward. And something you cannot forget is to always count a little breathing room right here. And put your stop loss a little higher. So, for example, let's say your spread. Can someone check your MT5 and check your MT5 and just let me know what is the spread on Euro JPY? Let me know. 9. Okay, if your spread is 9, that means your spread will be 9 pipettes. So if we multiply that by 3, then you want to add right here 27 to your stop loss. So your stop loss should be this right here. Now, I don't want you to go and just copy the number that's on the right, like 158688. Don't just go and copy that. Why not? Because this broker feed can be different than any other broker feed. If you look on TradingView and you look for Euro JPY, what can you see? You can see Oanda, you can see FXAM, you can see Capital.com, you can see Forex.com, Pepperstone, IC Markets, 8cap. Like those are all different brokers, okay? And what's going to happen if you look at, for example, the first one, Oanda, you see it ends at 734. Now, if we look at the same pair on FXAM, it's 716. That's a 2 pip difference, just because it's a different broker feed. Okay, so the brokers we trade on, they give us the market price we can buy or sell at, but different brokers will give different, different price feeds. And it's never a big difference, but like in this example, it's a 2 pip difference. So if our stop loss, in this case, it's 58 pips, so it's a big stop loss. That's normal with JPY pairs. JPY pairs have a big, pip count. But let's say your stop loss is like 20 pips. But because of your broker feed, it's 22 pips, or you put it at 22 pips, or you put it at 18, you know, then this can have a high impact on hitting stop loss or not. Because if it comes close to stop loss, it will get you out. That's something really, really important. Do you set one? Oh, my targets. We used to do the spread times three first and then determine the target. But technically, it's better to determine your target based on market structure. So that's just based on this high, right? So just put it at a high, then look at your one to one, then look at your one to two, and then from there you want to add your breeding room because the breeding room is just because of brokers and their spreads and everything they got going on. That has nothing to do with the proven system in this strategy because this strategy is proven to work at a one to one, da 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 da, and there, in that backtesting, we just put the stop loss above the high or below the low, if that makes sense. So I like to I like to determine my targets first and then add my stops or my spread times three because that will make sure that um, that I hit my targets faster. You can choose how you do it. It's a small detail, but I'll hit my targets faster that way because I don't like to have I don't mind a little less profit, but I don't like to almost reach my target. Like in this example, let's say this is your full take profit. What will happen is you will almost reach your target, and then it pulls back and you have a break even or you have a loss or you have something, whatever. I don't like that, right? I really don't like that. So that's that. Cool. Now, next to that, we don't really have any plays going on at the moment. Something to be aware of with Euro JPY and the reason why I'm going break even pretty fast is because the pullback, just like Maxime said, actually started here and it ended here at the highest point, which is just under 1 day. So that's a 1 day of real pullback. Now, of course, there were some other educators shorting Euro JPY as well. We have a strong M, stuff like that. You don't need to look at what other strategies are doing per se, but it will give you an extra confirmation, of course. Now, why do I like this M? Because that's something I want to go into. If we look at market structure, what do we want to do? We want to make sure that when you're trading in a downtrend, like we are doing, I always draw this, and we always talk about this is our 2 day pullback, right? Then somewhere along the lines of right here, we will have our arrow. And then inside of this high, we will have our M, right? I think everyone agrees with that. Now, these market structure waves, you will see that a lot of the times that structure can connect right there. That's how a lot of trend trading strategies work. They go based on structure, not necessarily on time. We base it more on time because a lot of sci-fi is based on time-based trading, just like the exit arrows and stuff like that. You see, it's all based on how many candles. Because what sci-fi is doing, it's really using the data statistically of how many candles does it take to go in profit. For example, if after 8 candles you're not in profit, statistically, you'll lose the trade more often. So then a lot of traders pull out after 8 candles. This is something I personally don't do, but you can do that. You can check it out. It's here in the training tab. You can learn some more about sci-fi and time-based trading. So long story short, we base a lot of things on time. As you can see, the 2 day pullback. Why is that? Because a 2 day pullback on the 4 hour time frame, for example, I believe that's 12 candles. On average, it's going to pull back 12 candles on the 4 hour time frame because we're trading the 4 hour time frame trend. Now our entries at the 30 minute, as you can see, our entries are, we're looking at the 30 minute, and then it's an average amount of candles that it's going to pull back. And this is just statistically been proven that the chances will be higher, or the odds will be higher, that it's going to go the right direction. Okay. Now, important to know, if I say it's statistically proven, then I know personally that there is a whole team of coding guys that are making robots and stuff to scan the market, and they really come back with that data. Okay, that's why we have the data that Maxime showed on where is the Notion thing? Right here on the ebook. If you look at the ebook, everyone has access to this, by the way, with extra tips and visuals. You'll see some extra tips on the average pullback. This is statistically the average pullback. Cool. So that's why I love this kind of strategies, because it's really proven statistically to work. Um, but anyway, what's going to happen a lot when we enter these zones, right? When we enter these levels, what's going to happen a lot of the times, institutional candles will come in, and institutions will come in to push the price a certain direction. And this is something that we saw right here. And I like this. People that trade smart money or have any experience with that will understand what I'm saying. The market makers pushed the market down right here. They retested the push. You can go and check it out on lower time frames. You'll see the whole structure of it. But they pushed the market down on the first leg. Okay, so if you look at that, they push the market down. They retest that push to mitigate their orders, to retest, whatever you want to call it. It doesn't really matter. And then they continue to break the previous low. The aggressive sell to buy and then drop again, that's something I like to see. I really like to see that, because that shows me, okay, institutions are shifting the market right here. And if big money decides to shift the market the other way around, that's a good thing. Okay. And then what you see is they take some time and then they retest it a last time to take some more orders out. They do the same thing again, and then they drop. So anyway, this is by all means, we're not trading any smart money, but that just gives me confirmation that if it's so aggressive, that's a good thing. That's a really good thing. And yeah, that's basically what we saw right here. Any more questions? Let me see. Bruno, I personally just close on a 1 to 2 always. Why? Again, you can take 1 to 3, you can take it to 1 to 4, 5, 6. But again, statistically, 1 to 2 will get you about an 80% win rate. So why even bother? The stress of keeping that trading, going through that pullback, going through that, drawdown, or seeing that trade go 1 to 3 to then pull back to 1 to 1. I just don't really, I'm not really interested in that, in that whole journey. Let me see. Let me just take trade. For example, right here, look at this arrow, right? We have a 2 day pullback. Everyone can see that. That's the last trade we took on AUD USD. That's a 2 day pullback, right? Then what we see is, we see not a perfect one, but we see an M. Let's say you're in the trade. That's why you want to count in that spread times 3. And this is just the example, okay? Your target is a 1 to 2, taking it all out here. I know that a lot of people will target the lows, okay? I know that some people will even use fib extensions to target even further. And I know that you can get a 1 out of 5 out of this. And if you're doing that, amazing. But I also know that statistically, my 1 to 2 will get me my bag, and I'll be good, and I'll be enjoying my life, setting it forgetting it. That's what sci-fi is for, and not really worrying about anything else. Okay? Am I still in EJ? If you're in EJ, um, I am. But I would say this is not the most traditional trade because we have only a 1 day pullback. Now, because of the circumstances we got in, which Maxime talked about, it's the pip range of the pullback, but also, it's that we hit this level right here that did a lot. Now, I didn't really call the trade or anything because it doesn't have a 2 day pullback. So, am I in? Yes. Is it break even already? Yes. And chances that it will hit break even are pretty high. I wasn't in with the full risk. Okay. Now, in terms of mindset and plug-in, because this is a recorded session, I might go 5 or 10 minutes over time. In terms of mindset and plug-in, first of all, what you want to know is, like I said, the strategy is fully tested and it works. I think that's been proven. Now it works not only with the 2 day pullback in the MRW, but it works without that as well, just using what is here on top in the training tab. So it does work. And why does it work? Again, because it's statistically been proven to work over the last years. They you know worked full time on this for like 4 years to develop it. And it's not just someone that has no experience. No, those are people that already had a decade of experience in coding and in trading. So just so you have any idea of the algorithms, the AI, and the stuff that goes into this, we're blessed to have it. And for us, it's just an arrow, but it's not just an arrow. It's really, there goes a lot into printing that specific arrow. So that being said, you want to trust, and that's important. You want to trust your strategy. Whatever strategy you're trading, you need to trust your strategy, because if you don't trust your strategy, you're not going to be able to fully follow the rules. And that's something you want to realize is when we look at this workspace, like for example, the ebook. If you really follow this ebook by the letter, you have the full strategy. Like everything's in here. Even if you don't watch any videos, if you have the basic understanding of trading, you will understand the full strategy just by, watching this ebook. Okay. Now, what's important when it comes to the ebook? It's important that you have, let me see, your trading plan. Without your trading plan, you're gonna get nowhere in trading. Okay. You want to have your trading plan set up with clear rules and strategies, a probabilistic mindset. That's what we have with the statistics, right? The risk management, emotional discipline, and self-analysis and improvement. Now, the first step is clear rules. I never have a situation that I am on the charts in a trade and that I am like, should I do this or should I do that? That will never happen to me. I will never think maybe I should do this or maybe I should do that. Why not? Before I enter any trade in my trading plan is exactly what I should do in every possible situation. Oh, high impact news? Pull out 1 hour before. Low impact news? Don't really mind. Hit a 1 to 1? Okay, go break even. Hit a 1 to 2? Take all your profits out. Tell me something that can happen in the market. Tell me something that can happen in the market, and my trading plan will have an answer on what to do. You know why? Because that trading plan and those answers are written at a time where I was not in a trade, so I was not emotionally connected with the outcome of what I wanted to happen. Okay. Now, once I have that, then I can go in and out of trades. I just got to realize that every single question I can get along the way has to be answered before I enter any trades. Okay, because before you enter the trades, you're not emotional. While you're entering trades and doing trades and stuff like that, you're emotional. Now you can do one of two things. You can say, hey, F the trading plan, I'm just gonna make sure that I'm never emotional. But that's gonna be a journey of self-development that will take you years, right? And that's something that we're still working towards. But having like a black and white trading plan that's just so objective, and that's why we always call it an objective trading system, is going to help you way more, way faster. Because I can give anyone a guide that they just follow, and it has to be a proven guide, like SIFI, for example, or any other strategy on Eovia, that's going to help way more. Okay? So that's something that's really important. And then from there, you print out your trading journal, trading ebook, trading plan, whatever. And if you, let's say you bump into a situation and you're looking for the answer to your question, but it's not in your trading plan, then you know what to do. At the end of the week, you go, you reflect, you ask questions, you connect with other traders, and you make sure that by next week you have that question answered inside your trading plan objectively, you know? Whether it is you have to backtest, whether it is you have to collect data, whether it is you have to do whatever. Now I can say with SciFi, there is no question unanswered. Okay. In the last 10 weeks, I haven't bumped into a situation where there were questions unanswered. Never. So maybe if you guys bump into one, ask it. Um, so those rules make it easier for you 100%. Without strict rules, you cannot survive 100%. Not many SciFi calls because of news this week. Moving sideways. Yeah, so when we don't have to do so, that was a little mindset, not too deep into that, because by all means I'm not an educator. I'm just hopping on some calls with y'all, and we happen to have some experience on the market, but that's it. So I'm not here to teach too deep into that, but that's something that helped me a lot in the last 5 years, is really having that plan dialed down and having an answer for every possible situation beforehand. That's an important part. Now, Rick is asking not many SciFi calls because of the news. So what happens a lot if you have a heavy news week, um, that the market's going to be pretty slow until that news comes up. So when that market's still pretty slow, then you don't have too many setups. Then when the news is there, then all the setups are going to blow, but then still we got to be careful because it's news. So next to that, December overall, statistically again, is the least interesting month to trade. It's still profitable. It's still, you can still get some great risk reward at the market. I believe on an average December, you can do probably about 10 to 20, risk to reward. Um, so 10, 15, maybe 20. So that's great. But still, that's the least interesting month, because we saw that we did 10 in a week a month ago, right? In terms of risk to reward that we got out to market. We had 2 or 3 weeks where we did over 20% in profit in a week. We are risking 2%, so that's a 10 risk to rewards, if you know what I mean. So overall, December is a slower month. Of course, mainly because the last 2 weeks are holidays and all the bank holidays and stuff like that. We had a bank holiday last week, and there we saw the same thing. Is we hit one-to-one risk to reward with like 4 pairs. If that wasn't a bank holiday, it had hit TP2 for sure. But we just didn't have the market volume to get there, and that's fine. Most went break evens. One we closed out in a little profit. Cool, but that's what these bank holidays do. Because that would have been like 10% profit for most of us. I think some of you were already floating in 10% profit, which is crazy to have in a day. But still, we got to go back to the statistics. Don't force things. Don't change it up because of one scenario. Know that every step in a strategy is based on tons of data, going back 10 years, 20 years of data, you know? So it's not because today the market happens to do something else that the averages change or that the strategy changes. No, you will win some, you will lose some, and that's just how this game is played. The best months probably March, April, May. Those months are most crazy. But I don't know out of the top of my head the statistics per month. Maybe I could look it up or I could connect some people to ask, but I believe March was personally one of my biggest months. Not last March, but a few years back, in terms of risk to reward. Is it interesting to go entry on Euro GPY when it enters the zone? Personally, I'm already break even. Um, Although it just didn't hit it, you know, let me take a look. This is your entry. This is your top loss. One-to-one risk to reward is right here. So this is up to you, what you want to do with that. Now, because it's a one-day pullback, it didn't touch. I'm just careful because it's a one-day pullback. It didn't touch the one-to-one risk to reward yet. We missed that with about 3 pips. So that's pretty close. So if it hits again, some people will go in. Personally, if this hits again, I will be out. So that's just something to take in consideration. After the second arrow, you can see a good M. Yeah, yeah, you have 2 up, 3 down, 2 up, and then what I like to see is that it comes down and breaks it, and that's what you see a little later. But that's still pretty good. So that's after the second arrow. After the third arrow, you have you have this one. Maybe that's the one you mean, Alice. That's a strong one. But you'll see, you have that right here. You have that right here. At the end of the day, an M is just a lower high, lower low. That's just what it is. The market starts coming up, and at a certain point, you create a low, you create a lower high, and then a lower low, and then the market's going to reverse. We call it an M because our brain, understands that better. But it's the same, it's just market moving away. And then, of course, if that continues, then you're going to keep creating lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is not really a lower low, but anyway, you know what I mean. Um, People will say, "Oh, I see 5 M's." No, the market just shifted. It's not necessarily 5 M's that's doing it. This is just lower lows and lower highs. Yeah. So that's it. Okay. With that being said, I'm going to close off the call. So we're already 15 minutes over time. We recorded this session because a lot of people were asking. We're not going to record every session, but we're going to see what we're going to do with that. I'm going to give it back to Maxime, and then he's going to close off the call. Let's go.
Amazing, guys. Amazing. Drop something in the chat for Jens.